Welcome back to live market coverage here on Yahoo Finance. I'm Zach Guzman. Right now, we have the S&P off by about 2%. And right now, the sector that is bucking the downtrend, although it's still off by about three quarters of a percent right now, is the energy sector, doing the best on the day so far, largely driven by the fact that crude is up, sitting at about $23 a barrel right now. Of course, a lot of optimism over the weekend after plans were announced regarding OPEC Plus's decision to cut production to help counter the demand shock that we're seeing play out as more and more people stay home and coronavirus ripples across not just economies here in the US, but across the globe. And President Trump took to Twitter to talk more about that supposed deal, including his take on the production cuts that are being reported right now. He said, quote, having been involved in the negotiations, to put it mildly, the number that OPEC Plus is looking to cut is 20 million barrels a day, not the 10 million that is generally being reported. If anything near this happens and the world gets back to business from the COVID-19 disaster, the energy industry will be strong again, far faster than currently anticipated. For more on this, though, I want to bring on our next guest, George C., Annandale Capital CEO, for his thoughts. And George, thank you for joining us on the phone here. When we look at that tweet and what might play out here, of course, double what's already been reported on the OPEC Plus cuts would be good from those OPEC nations. But when you look at the size of demand, even Goldman's saying that might not necessarily be enough to counteract what has happened for demand for oil right now. So how do you see that playing out?
Zach, great to be on with you all today. It's more volatility, uncertainty, and a lack of stability in the oil and the natural gas markets. It's nothing different. It's kind of the same thing yet again. And it's interesting because the president has rushed to the rescue of the domestic oil and gas industry by intervening in the OPEC plus negotiations and getting them to do something. But the reality is, until we get the global economy back online and humming, the supply-demand imbalance is tremendous and threatens every non-major oil and gas company in the U.S. and in Europe with insolvency, because you just can't make any money at less than $40 on WTI. And actually, the sweet spot for WTI is more like $65 to $85, where both producers and consumers can handle those kind of prices. And we're so far away from that. And natural gas being under $2 a foot, the natural gas producers in the U.S. really need about $2.75, $3 a foot on a regular basis to make free cash flow for those companies. So the oil and gas industry has just gone from comatose to triage. We're trying to revive the patient. We're trying to stem the blood loss. And the most ironic thing maybe of all this, Zach, is you got 3 or 4 years with all this supply being cut back domestically and in deep water projects and high capex projects around the world. We could have a significant supply deficit in 3 or 4 years, and we might see $100 on WTI again and $3 to $4 gas. It's just so volatile, and it's not good for the global economy.
Yeah, we had a prior guest on our show last couple of weeks calling for $9 potentially prices down there that we could see historic lows. But I mean, when you look at kind of what's going on, the IEA is expected to announce that the Strategic Petroleum Reserve might get a boost here, but so much is being made that supply is already so constrained that they might not even have anywhere to put it. When you think about how we could hit lockdowns by the end of April, just because there is so much crude to go around right now from all the producers that had yet to cut and might potentially choose not to when you think about how things are done here in the U.S. So all of that to say is that it doesn't sound like there may necessarily be any relief coming in the oil sector moving forward. But looking outside of that, of course, we get earnings kicked off in earnest tomorrow with the big banks expected to report, and things have not been pretty. Historically, the weakest start to Q1, I believe, ever. So when we're looking at this, what are your expectations for earnings season as more and more companies probably look to adjust what's to be expected moving forward?
Well, that's the relevant question, right? What is the E and the PE ratio going forward? And that will determine a lot of where the market goes over the next 6 to 9 months. And I would say that the backward-looking Q1 number is irrelevant at this point, and the relevant number in terms of what the market resets at is the Q2 number, and we won't know that till late July, early to mid-August. So we've got a long way to go before we see what kind of numbers the market's really going to be paying attention to. And at that point, once it processes a huge hit to the S&P earnings in major U.S. companies, what are going to be the expectations going forward? And that will depend greatly on how much of the country is reopened and the prospects for a secondary closing later on down the line if the virus rears its ugly head again. And that's so complicated and so unknowable that it's impossible to ascertain where the market's going to go in the next 2 to 5 months. And that's what people are really wrestling with. You've seen a lot of very, very wise, bright people on both sides calling for the market to be off to the races and get back close to the highs of earlier this year. And then a lot of smart people saying we're going to retest the lows or even penetrate below the lows. And they both have rational cases, and we don't have enough data to ascertain which of them are right now.
Yeah, and I mean, even within firms, we saw that from Goldman Sachs too. Strategist David Kostin changing his call, abandoning the call that the S&P could approach 2,000 and hit new lows there. And we're talking about all this now, saying that it could go to the upside. So we're seeing things move in real time here, but we'll be tracking all the updates on the earnings front. George C., thank you so much for joining us, sharing your thoughts. Appreciate it.
Great to be with you, Zach. Thanks for having me.
All right, take care. Be safe out there.